Welcome to Mark Arnold's Finance. We just ended September, and what a red month it was. In fact, September is typically the worst month out of the year for the stock market. So maybe October will be better for us. I don't know though, because there's a lot of things going on with inflation, geopolitical issues worldwide. There's just still a lot that I feel needs to be baked in, and so there's still some downward pressure. But regardless, I want to share with you guys what I plan on buying in October. And as a bonus, I'm going to share with you the dividends that I earned in September. That's the end of a quarter, and a lot of companies pay their dividends in September. And this was the highest month yet for me in dividend earnings. So I'm going to share that with you at the very end. So what I'm going to do is I'm going to share with you 12 stocks that I will or want to buy in October. And I put these and I separated them into 4 sections. So the number 4th section is my leftover buys, and there's going to be 3 in each. So my leftover buys are kind of like if I have the extra money and these stocks present an opportunity, I will buy them. The 3rd section is my average down buys. These are stocks that have gone down massively in my portfolio, and I want to be able to average down because I still feel they have positive futures. The 2nd section is high priority buys. So these are buys that I definitely will buy in October, and they're just good quality companies, and I'll talk a little bit more about them when we get there. And then the number 1 section, so I'm going from least to most likely of my buys, is the load the boat buys. This section is I want to add heavily because I think long term these stocks are going to prove to be big profit machines for my portfolio. So that's how I'm structuring this. What I'm going to do is I'm going to first show my portfolio performance, then I'm going to share with you these 12 buys and then my dividends. So what I want to share with you guys, if you're new to my channel, is I'm very transparent in this way. I'll share it during the good, during the bad, and I provide diverse quality content. I'm growing myself, so I'm constantly sharing my knowledge, and I want this to be a channel where we all grow and learn together because I want us all to become wealthy long term. That's the goal. So if you like that type of transparency, content, etc., be sure to subscribe and give my channel a shot. I think you'll like it. So let's get right into that transparency and look at my portfolio performance. We will see here that of course, September's been horrible, and my portfolio, I don't think it's ever been in the red this much. It's hit over 10% in the red, which is over $4,500, and you'll see my technology sector finally hit all in the red. Amazon was holding on to the green, and then it went into the red. Microsoft I never thought would be in the red, and it is, so look at this. If you have any questions, anything in purple is the allocation of my portfolio by market values. So let's get into my buys for October, and we're going to start with that 4th section, which is the leftover buys. So these are possible buys if they get to a good situation where maybe they fall pretty drastically, or maybe there's some positive news or outlooks that pop up, and yeah, then I'd have no problem buying these. So we're going to go through these. These aren't deep dives, so just keep that in mind because I want to get through all 12 so you can just see what I'm buying. That's the point of this video. So let's start with the first leftover buy, and that's going to be Costco. Now, Costco is a very high quality company, don't get me wrong, but I feel it's still very overvalued. And so for me, this is just a company that if it goes down in October, I will buy. But if it stays where it's at, I probably won't buy at this point. We'll see here with these key statistics. I'll show this with every stock, but their PE ratio is a lot higher than the industry average. Their growth is decent, their profit margins are low, which is a good thing for Costco because they're all about bargains, so they're showing customers we're not taking advantage of you. So high quality company. I just put a video out. My last video was called My Dream Stock, and it's Costco, and I talk about everything in Costco, so if you're interested in that, be sure to watch that video. My next leftover buy is Realty Income Corporation. Now this company just hit below my average in my portfolio. So if it drops, I'd say another 5 to 10%, I'd be tempted to start buying because I think long term, this is a good diverse REIT, and it does provide a good dividend, but I will say right now, I do feel it's overvalued. We'll see here its PE ratio. Its growth is so-so, and its profit margins are average. So it's not one that is high on my list. That's why I put it in this last section. But because it fell below my average and it's a monthly payer, I am interested. So that's why I put it in this section. My last leftover buy is going to be Warner Bros. Discovery. Now this spun off from AT&T. It's pretty much crashed since it spun off, but I think long term this stock does have some great potential. Now, this statistics isn't going to show much because it is just spun off and newer, so I would take this with a grain of salt, but I will say this. I think it's going to be one of the top streaming platforms and maker of big box office hits. So I think long term, I have kind of some confidence that it will do well and I'll be in the green eventually, which then I'll have to decide, do I want to keep or sell? But for now, I will definitely add should I have extra money. So now let's go to the third section, which is the average down section. These are stocks that have gone down significantly in my portfolio and ones that I want to buy to average down. So the first stock is AT&T. Yes, I know you'll be saying, why are you buying this company? It has not been a good investment for many years. Well, I will tell you, I really believe this company is finally getting on the right track. They are lowering their debt. They are focusing on what they do best, and that's telecommunications. And so, yes, I don't think this will be a forever hold for me. I don't think this company is a great investment long term. But because I got into it, I want to take advantage and average down on this company that still pays a very healthy dividend. So we will see here that with AT&T, they did spin off part of their businesses, so I would take this with a grain of salt. But their PE is definitely inexpensive compared to the industry average. Their growth in their EPS, again, this is where I think it gets a little convoluted due to their spinoffs, but it shows that they're doing pretty well. I think the last 5 years is probably a more accurate one, and their profit margins are decent. So AT&T to me is one that I want to exit probably someday, but I think they're finally turning things around, like I said. So I think long term, I will be in the green at some point and have that opportunity to sell out, or at least sell out partially of this holding should I decide to keep it, depending on what the fundamentals look like at that time. The next company that I am buying to average down on, of course, is Meta. This is one that has fallen drastically in my portfolio. I got in at the wrong time. I really think this is a great bargain right now. They've fallen down significantly in price, and I think a lot of people are not factoring in a lot of the growth opportunities with Meta. It's something that people are just looking negatively down on right now. I released a video called Meta's Hidden Opportunity, and does not have anything to do with the metaverse. It's something separate and something I think they can really leverage on and make some good profits long term. But regardless, they are the largest social media platform in the world, so that gives them so much opportunity with all their users. Right now, Meta's PE is at 11.3. The industry average is an 18.53. They've fallen drastically. Their growth is healthy. Their profit margins are extremely good. And so I just see a company that has good cash flow, good profits, good growth. Of course, the last year, the growth has been slow, but in the future, I really think this company will prove to be strong, will survive the turbulence that they're experiencing now. And so I definitely want to average down. I am bullish on the metaverse. I know that's something that you can disagree with, but that is something I think does have a future. So the last one in this average down by section is T. Rowe Price. Now, T. Rowe is a stock that I think is pretty predictable, which is why I want to average down right now. While the economy is not doing well, this asset management company is going to reflect what the economy is doing. And so what I want to do is take advantage and buy this company when the economy is not doing well, because when the economy is doing well, this will flip around and go up, pretty significantly. And I think it's a quality company. They have virtually no debt. Their PE ratio, you'll see here, is lower than the industry average. Their growth is medium. Their profit margins are medium, so they're healthy. And so I just think that this is a great financial stock to hold because it's different than the bank I have, an Ally, and the ETF. So I add some diversification within my financial section. So I just think it's a high quality company, and it's going to just reflect what the economy does due to it being an asset management company, and people are selling out of assets right now. So yes, I will be holding this one long term, but I am definitely seeing this as the prime opportunity to average down on T. Rowe Price. The next section is my high priority buys. These are stocks that are high in quality. They've fallen down in valuation, so they are at bargain ranges. And companies that I think will be great long term, provide strong growth and good appreciation for my portfolio. So the first one is Home Depot. Now, Home Depot to me is just going to be a great long term hold. I don't see this company going anywhere. And Lowe's is competition, but Home Depot's is far and first in my opinion. So though it's slightly overpriced, its growth is in the middle and its profit margins are kind of diverse there, you'll see. I just think this is a quality company. It's got a great e-commerce side of it. And so I really think this is going to provide great growth for my portfolio long term. Now my next average down is, surprise, surprise, going to be Vici. It's been dropping, and I think that's because the economy has all these worries. So because this is an experiential REIT and has a lot of properties on the Vegas Strip, I think that's why people are worried that maybe not many visitors will go to Vegas. But I love this unique REIT, and so if it's below my average, I kind of have to add because I really think long term it's going to be a great profit machine for me, and it pays an excellent dividend right now. So its PE ratio is kind of in the middle of the industry average. Its EPS growth is a little lower. It is newer to the stock market, and it just got accepted onto the S&P 500. And its profit margins, though, are excellent. So it really is, they're doing big acquisitions, which are going to affect some of their financials, but it's a very healthy company, a very high quality company. So it's one that I'd love to average down on. So I'm looking forward to that. Now, the next one in my high priority is Amazon. Amazon, I could say a lot about this company, but basically it's dominant with its Amazon Web Services. It's dominant with its online e-commerce services. Everything it kind of gets into, it's highly successful at. So what I see is just a company that long term, it's going to be a great growth stock for me, I feel, where now people are kind of seeing it as overpriced. I see right now it as underpriced. So with Amazon, we'll see here, yes, with its PE ratio, it's pretty high up there compared to the industry average. Its EPS growth, it's mixed between the 12 months and the 5 years, and its profit margins are really good. So I just think you got to look outside of the box with Amazon. It's got a huge moat. It's just killing it with Amazon Web Services, and there's so much more. I've done some videos on it too, but this is one I'll be happy to average down, and I'm waiting for it to go closer to $100 per share before I really put some serious money into it. So now let's move into the last section, which is the load the boat section. These are stocks that I'm drooling over and I want to add to heavily. So the first one is going to be Ally Financial. I use Ally Financial, so maybe I'm biased, but I think it's a great company. Using their app is fantastic. Their customer service is great. And I think right now with interest rates going up, they're going to attract more customers with their high yield savings accounts. But not only that, I think they're going to grow in all sectors of their company, in all sections. They do a lot of loans with autos. They're getting into the home loans. There's a lot of other things they do. So I just really think this is an attractive buy. You'll see there its PE ratio is towards the low end of the average, just slightly. You'll see its growth is in the middle. Its profit margins are decent. I really think that this company is just undervalued right now, and it's dropped pretty significantly over the last month. So it's one that I definitely want to add to because my holding isn't that big. So that's why it's a load the boat buy for me, because I want to get it to about double what I have now, which will also average down pretty nicely. But I do think it has a very bright future and is going to prove to be an attractive financial stock. The next load the boat stock is SCHD. Now this is a dividend ETF, so it targets companies that pay high dividends that are above in performance of their peers. So they choose companies that are above their peers. And what we will see here in their top 10 are great companies: Pepsi, Texas Instruments, Cisco, Coca-Cola, the Home Depot, Pfizer, so on and so forth. So this is a great ETF. It's got great holdings, and you're collecting a healthy 3.35% dividend yield right now, which for a high quality ETF, in my opinion, is a no-brainer. So I want to add heavily while it's down because now it's in the mid 60s. I think this will shoot back up towards the $80 per share range once the economy starts to show some strength. So I would hate to miss out because this is my forever hold, obviously, with an ETF. It's one that I'll just buy, average in, but now is the time to really be heavy in your buys with it. Now my last load the boat stock is my favorite stock in my portfolio basically, and that is Microsoft. I think this is one of the highest quality companies in the world. It's trying to acquire Activision Blizzard, So it's really working on dominating the gaming industry, which is huge. They have 80% of their revenue come from subscription-based services. This is solid subscriptions because it's not like advertisement like Meta, where we've seen it be so volatile. They have sturdy membership services that they provide that companies pay year over year because their companies are dependent on their services. So they have their own Azure cloud-based section of their company that is behind Amazon, but it's in second place, and it's growing actually very healthily. There's a lot to be said here, but their PE ratio right now is below the industry average. This is rare. Their average, I think, over the last 5 years is close to a 35, 36 PE, and now they've fallen below a 25. Now their growth is excellent, and their profit margins are great. So all I gotta say is this is one that if you hold in your portfolio or you don't, I'd highly consider buying or adding, because I think long term you'll turn around and say, man, I wish I would have bought Microsoft when it was in the low 200s, because now it's in the $500, $600, close to $1,000 per share. I'm talking long term, but I think this company will provide great profits in the future. So there are my buys for October. I'll put this up here to show you the summary of it. So I have, at the bottom, my leftover buys, above that, my average down buys, above that, my high priority buys, and at the top, my load the boat buys. So be sure to let me know if you agree with me here or what you would put in these sections yourself. I'd be really curious to hear that, and I'd appreciate if you do share maybe at least one stock per section, a load the boat, a high priority, an average down, and a leftover buy. So now I want to share with you my dividends I earned in September. Now, September was a great month for a lot of investors. It's when a lot of companies pay dividends, and it's no different for me. So this is the month that I have earned the most dividends yet. So that is a great thing. So I'm going to show this here. This is my year to date so far in 2022 of what I've earned. So I've earned $731.34, and you'll see month by month what I've earned, but there in September, I've earned $161.31. That is amazing. I remember when I first started investing, I couldn't even really imagine earning $100 in a month. Now I'm earning $161. My goal is by the end of the year to have this at $1,000. I want to finish at or above $1,000, which I think I can reach. To be earning $1,000 a year just in dividends, that's fantastic. So that will only grow as I invest and reinvest these dividends. Let me know if you had a positive dividend month. It doesn't matter where you're at. When I earned 5 cents, I was excited. Now I'm earning $161, I'm excited. It's the patience and the long-term goal with dividend investing or investing in general that you have to keep in mind. It seems slow in the beginning, but then it picks up. That snowball effect happens. So right now, with this economy, the stock market kind of going down in the red, I believe it's accumulation time. This is time to buy your stocks. People are waiting for a bottom, but we've seen how that doesn't work out for many. So I would just say start buying, pick those companies you really want, the high quality ones, do your research, and just accumulate, because in a year, possibly 2, and then in 5, definitely we'll look back and be like, that was the time to buy stocks. So might as well do it now. Don't be an investor that buys when the stock market's doing really good, and then when it's doing really bad, you be fearful and you sell out, or you hold cash and don't buy and don't take advantage of those opportunities. And that's something I just don't understand, because it's like buying a house. You want to buy it at $600,000 or $400,000. It's the house that you want, just like with stocks. So you might as well get it at $400,000 instead of $600,000. So that's what I think of stocks right now. So let me know what you thought of this video. Did you like this content? I can release this every couple months on what I plan on buying, and just put it in maybe sections like this or change it up. But this is how I thought it'd be best to approach it for October. And with that said, I hope you guys have a great day, and we'll see you next time on Mark Arnold's Finance.